Well, hello everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and with me today is Josh Lefler. Hi, Josh. Thanks so much for coming back today.
Thanks for having me again.
hmm All right, so you've been here before, so we've already introduced who you are and your past with trading. So we'll just get right to my first question for all of the traders that come on this event, and that is, how would you grade your week of trading so far on your typical school grading scale, an A to an F?
Yeah, I mean, I think it goes back to last week. I was pretty aggressive on the long side Thursday
hmm
night into Friday. Friday, obviously, we had a pretty substantial gap down. The problem with being early on, um, the problem with being early is that you're just kind of happy to get a reprieve. So,
hmm
um, I was selling a lot of my longs Friday when we bounced and went positive, and I made money net to net from Thursday to Friday. I took a lot of risk to not really reap a ton of reward. Um, and then I think, the biggest kind of issue I have with my trading this past week is just that I didn't, hold some of those long, like I took all the risk. I should have held some of those at least into Monday and then into Tuesday. I mean, I left a lot of money on the table by selling my longs. And then where I think things really kind of, the type of trading that I do is I look for, moves one way or the other in a pretty substantial direction. And then I try to kind of capture the other way. So, I started shorting yesterday, did good yesterday, but, today it kind of got stubborn with the short on tech, and I'm still short the Qs. I took them into the Nvidia report. Um, it's not a disaster, but it was a gamble.
Mm,
Um, but I think when all is said and done, the week will still really be dictated by Jackson Hole on Friday. I mean, I think, it's all going to come down to what Powell says. And I think there's still the, chance for us to kind of come lower. I really wasn't expecting the rate move that we got today. That really caught me off guard. I mean, the
mm,
the rates really fell hard. Um, there were some big options bets in rates for next year. Somebody thinks that that we're going to be back at 2% by middle to end of next year. I still find that very hard. I still find that very hard to believe, but I don't know. This is trading. So overall, on a scale of F to A, I don't know. Honestly, C plus. I'm not really happy with myself last week or so. I from leaving a lot of money on the table to not really playing tech correctly. This one kind of caught me a little off guard, but that's trading.
yeah, that is trading. For everyone who heard the barking, I did mute myself on the live, but I don't think I muted myself for you, Josh. But sorry, I have some extra dogs in my house this week than I do normally do, so they're not kind of used to being here, so they're a little loud. All right. So I am just going to put a comment in the live chat right now for everyone. Sorry, to submit their questions, just so you can see where that chat is. This is a conversation between Josh and myself, but also a conversation between you guys, the audience, and Josh. So go ahead and submit your questions as they come up, and he'll answer them. I'll make sure to ask him all of them by the end of this. So in the second half of this, we'll get to those audience questions. So go ahead and let them pile up as you come up with them. Okay, so you mentioned it, Josh. You were shorting the Qs heading into Nvidia's report today. As you and I were talking about right before we got on here, an absolutely blowout report, beating expectations on the top and bottom line solidly. Nvidia now saying it expects third quarter revenue of about $16 billion. That's up $2.5 billion from this quarter and way higher than the $12.6 billion that analysts were expecting. Give me your reaction to today's report.
It's a good one. Um, I, my initial thoughts are last quarter's guide was insanity, and I
mm-hmm.
definitely didn't think that they could then guide like that they would then take that this quarter and guide even crazier.
Mm-hmm.
But and again, I'm a little biased because I'm short tech here and whatever, it is. I'm going to try not to let that play into kind of my answer here, but I
Mm-hmm.
just don't know that that's sustainable quarter after quarter after quarter. They're putting a lot of money
Mm,
into building out infrastructure. Clearly, everybody thinks, AI and this kind of generative computing and that stuff is the real deal. And I don't disagree, but I think a lot of other companies in tech are going to have to spend a lot of money to play catch up. So I
mm,
think that's one thing. So I think Nvidia can certainly kind of, or they have kind of set themselves as, the standard in this kind of AI frenzy.
yeah.
Um, but I don't know how sustainable that continuous raising of guidance can be. And then obviously it's going to come down to all supply and demand. I mean, the demand is there. There's no doubt about that. The demand is there, but
Mm-hmm.
how quickly can they get their supply to meet their demand, right? Like you can have all the demand in the world, but if you can't create product, it doesn't really do much of anything. They're going to
Mm-hmm.
sell everything they have left. That's known, fine. But now it's going to come down to, how realistically do they think they can get their um, supply to kind of catch up to this demand? And, based on, supply chain issues and things like that we're still kind of lingering over from COVID. And, I don't know. I honestly, I thought they were going to sell the Nvidia report no matter how good it was. Clearly they
Mm,
didn't. Um, But even here, like on a guidance like that, I mean, in any normal given environment, this thing would be trading 530, 540. Like it's
yeah.
already had a huge run up. Like there's going to be people here that are like, okay, we got what we were looking for. We're taking some profits. Like, I don't know. We'll see how the conference call goes here in 30 minutes, but I don't know. I just don't know how sustainable it is. Um, we'll see. That's my
Yeah.
initial reaction.
I was kind of on the same side as you, kind of expecting the stock to sell off even on a good report, just because of what we've seen so far this earnings season, with other big tech names rallying big into the report, meeting expectations or beating expectations, and selling off because that was already kind of baked in. Why do you think Nvidia is different than those other big tech names that, did the same?
I think Nvidia has the unique kind of, like, they have multiple factors going for them.
Mm,
It's a real company.
yeah.
Um, they're not like this kind of, small cap, hope growth company. Like it's a real company that's really generating revenue, generating earnings. Um, but then you also have like the whole kind of social media meme frenzy surrounding this stock as well. There's more, more people have asked me about Nvidia in the past, 2 weeks than any other meme stock. Nvidia's talked about today as much as, GameStop was, 6 months ago. So, or a year
Mm-hmm.
ago, whenever that was. So, um, I think they just have a lot of factors going for them that gets, the typical retail guy to play, and also, obviously institutions. And look, I mean, there's a case to be made for both sides. Like, yeah, if they can sustain this growth and they can sustain this kind of guidance and continuously going on things, then sure, it could be a $600 stock, before we know it. But,
Mm.
I don't know. I don't think so. And we'll see.
Last time you were on this program, you described yourself as a contrarian trader. You like to kind of go against the trend, find somewhere to short when things are long, etc. So, how do you approach big gap ups like we're seeing with Nvidia after hours today? Stocks up 7% after rising, over 3% in the session. How would you possibly approach this stock maybe in tomorrow's session if you were looking to use your own strategy?
Yeah, news and earnings and stuff like that kind of changes that. Like,
Mm,
yesterday is a perfect example, right? There was no news on Tesla, there was no news on Nvidia. We were gapping up huge in the morning. I shorted. I made good money on the shorts yesterday.
mm,
Um, Covered the Nvidia, covered the Tesla, stuck with the Qs because I didn't want to give it again. I didn't want to do what I did on the long side and kind of get out too early if we were going to continue to roll over. But that being said, like I I probably will not touch Nvidia tomorrow.
Hmm.
If I was not short the cues, I probably would try Nvidia. But honestly, I would. I mean, if we go to 520, I'll probably try shorting Nvidia here too. I mean, I again, like this one caught me off guard.
Hmm. Yeah,
This one caught me off guard. I was not expecting this.
yeah. I mean, the guide up is insane.
It's big.
I would.
It's big.
It's yeah. I mean, but
It's big.
everyone thought that in Q1, and they beat it. They beat
Yeah.
their guidance. So we'll see if I mean that's some major growth to get
But
in this
but
quarter.
again, I'm sitting here saying to myself like this thing should be 520, 530 on a guidance like
Mm,
that, and it's kind of
yeah.
just hovering here at 510. Like there's clearly some sellers at this level,
Hmm.
um, but
How much
they could
focus is
easily.
on, the earnings call for a report like this? Do you think people are kind of sitting on their hands waiting to see what the CEO has to say?
Yeah, I think it'll definitely, it's definitely going to come down to what they say on the conference call. Do I think it can pull one of these like where it goes red after the call? No.
I don't think you
But could it?
guide up like that and say
No.
anything bad in the
But
call.
certainly, he can say something on the, something could be said on the call, and this thing could be 490 by the end of the call. Um,
Mm, yeah,
but I don't know. We'll see. Again,
we'll see.
this one is a shocker to me. I was not expecting this.
Yeah. We're toward the end of earnings season here with this big banger at the end. But other earnings this week have been focused on the retail sector. We've gotten results from Lowe's, Kohl's, Foot Locker, Abercrombie and Fitch, and more this week. After next week, we also got retail with Target, Walmart, Home Depot, etc. Uh, all of these reports have shown mostly that consumers are pulling back on their discretionary spending. This is something, of course, the Fed wants to see, but they're still spending, just choosing more specifically what they're spending on. So, what's your take on the strength of the U.S. consumer at this point?
Um, my take on the strength of the U.S. consumer is that I, I think we're going into a recession no matter what.
Mm,
I could be wrong. I speak to a lot of, like a lot of my friends own small businesses. I have friends that own tattoo parlors. I have friends that own, boutiques and things like that, and they're
mm-hmm.
already starting to feel it. Um, Here's my problem with the Fed right now. No matter what, there's no way, even if even if even if inflation, even if PMI and all this stuff, and inflation starts coming back down rampantly and things like that, like they don't want to end up in the same situation that they were in and then worse. So like there is
Right.
no, like I just don't see how it's possible. Can they say, yeah, we're going to stop here and pause for the next year and then, reassess, or pause and reassess? Yeah, but like I just don't see how one or two good data points is all of a sudden going to make them say, okay, we're going to start cutting. Because the second they start cutting, inflation starts to rise again, and you get back to where you were. So it's like you raise, then you cut a little bit, but now you don't cut to where you started. And now it's like inflation goes up again. Now inflation is higher than where you stopped raising. And it's like you're like in this back and forth cycle. And I just don't see the Fed wanting to get into that kind of predicament. They'd rather have rates higher for longer. They'd rather squeeze the consumer. They'd rather, honestly, I think the Fed is okay creating a recession if it means
Mm-hmm.
that they're not going to get back to where they were,
Well, and they've
2 years ago.
said it's
Yeah,
less of a risk to cause a recession than it is to not get inflation
for
down.
sure. And
Yeah.
so I don't. I'm stuck between whether the market really believes it, or can we really sustain these rates for an extended period of time because consumer is so strong. But then I
Mm-hmm.
hear from friends, and I see, when I go to stores and things like that, like there's not as many people like there's just not, you know retail is not what it was. And
Mm-hmm.
I don't know. I honestly, this second right now is a point in my 20-year career that I really can honestly say I don't know what we're going to do from here. I usually am the
Mm.
one who is comfortable not calling tops and bottoms, but is comfortable like putting my kind of view out there. Here's what I think's going to happen. Here's what I think, but I just really am not sure myself. I mean,
Yeah.
I just don't know. Like it's to me, it's crazy that the market's even where it is. And I think, and again, this is probably me, hoping a little bit that, because I'm biased, because I'm short tech here, but like, I gotta believe that Powell is gonna think the same thing, and he's gonna come out on Friday and basically say like, we're not where we need to be, and there's more, pain to come. Do I think it's going to be a repeat of last year? No, definitely not. I mean, that
Mm,
was, he was very clear that, hey, we're just starting, and we have a lot of raising to do and things like that. Um, but I just don't see that he's going to come out, on Friday and be like, yeah, we're done. Um,
mm,
and if he does, then yeah, I mean, we'll be back at all-time highs before you know it. I personally just don't think that's going to happen, but and I placed my bets accordingly to kind of play it that way, but I guess we'll see. Um, and then
you,
next week I'm on vacation. I hate being in positions when I'm on vacation because I can't really
mm,
monitor them. But
yeah.
like, I'm at a point now where I'm short the cues, I'm short tech, and like I don't want to just bail to bail because I'm going on vacation. So like, I just gotta kind of see how it plays out over the next couple of days. But this uh this one's costly. This one's
You
gonna be
mentioned
interesting.
you mentioned the sustainability of higher rates for longer. How much longer can the economy handle that? And there has been continued pressure on the banking sector specifically because of that. Another batch of downgrades this week from S&P, following the downgrades by Moody's and the warnings from Fitch earlier this month. All of this again is focused on that impact of higher rates and how it's impacting banks specifically and their balance sheets. Do you think the Fed should or will consider this in any of their upcoming meetings?
I don't know. I think I mean, look, banks are banks. They make money when interest rates are low, and they can lend money, and they can lend out a lot of money.
Mm-hmm.
And when interest rates are high, and they can't, and like, no banks are lending in this environment. Like, nobody, I mean,
Yeah.
nobody really wants to borrow in this environment, but at the same time, like, banks aren't lending. Now they have like these, these changes in some of their structures where they have to have more capital on hand. So that's even leading further to, the capital, but the kind of depletion of lending of capital. But I just, again, like, there's so many things to me that line up, um, for us to kind of go into a little bit of a recession, um, people to stop spending, um, and the Fed to kind of keep rates where they are for a decent amount of time, that I just think the market is a little ahead of itself. Like, I just think like
Mm-hmm.
so many people think we're just, we're in the clear. Okay, we made it this far. Like, nothing really bad, nothing really terrible has happened. Like, but again, we're in such a frothy market also that like, it's really only going to take one crazy event to really, I mean, you saw it last week. Like, markets sold off pretty hard last week and the week before, like, with the rate, when rates started rising at the
Mm-hmm.
pace that they did. And now for rates to totally like sell off like they did today, the dollar to kind of sell off like it did today, I just think there's a little too much kind of hope in the market right now, and uh, it's going to take time to play out. The problem with the market is that hope can keep us up here,
Mm-hmm.
maybe for long enough to get past the real kind of, you know, issue. And so that's my problem, is like, if we don't get a significant event that has us sell off decent, then there might be enough money out there to kind of keep hope, keeping this market alive. And, you know, we'll see. Again,
Mm-hmm.
I'm I'm a little shocked.
You mentioned earlier that you were a little confused by the tumbling of rates today. I mean, rates, as you mentioned, have been, excuse me, on an absolute tear lately. The 10-year just, I mean, rising and rising and rising, and that's sending mortgage rates higher and higher and higher to the highest level in 23 years. If you were going to try to explain what happened today, what might be your thoughts on why we saw such a big sell off in rates today?
I mean, I did see that there was a big options bet on SOFR rates that, somebody for March of next year, I think, believes that we will be back to 2%. Or at least, they put on enough options to play it that way. Do they really think we're going to be back at 2%? No, but they obviously think we're going to be much lower.
Mm-hmm.
And I think that had something to do with today's kind of, sell off in rates. Um, we were definitely oversold on TLT. Like I'm not,
Mm-hmm.
on the 20-year. I'm not going to ignore that. Like, we were very extended from the 8 day. We were trading at 91, 92. The 8 day was at 94. Yesterday we kind of, put in a little, reversion back to the 8 day. But for me, I really thought, we'd get back to 94 because of an older oversold bounce, and then maybe go sideways or come back down a little bit from there. But the fact that, we literally just, erased, 1, 2, 3, 4, 5, 6, 7, 8, like 8 days of accelerating rates to the upside in one day. I mean, I don't know. I don't. I mean, again, people could be thinking that maybe he does say something that puts everybody at ease. Um, that puts everybody at ease. My thing is, like, you're still paying a lot at the grocery store. You're still paying a lot at the stores. Like, you
Yeah,
used to go to
my grocery bill
McDonald's and
has
you
not gone down
right,
at
and
all.
you like I used to go to McDonald's with my kids and I can get like, a Happy Meal for like, whatever, $5, and now it's like $8, and like, but through this whole rising of rates and inflation coming down, like, it's still up there. Like nothing has kind of passed on to the consumer. And
Mm.
so I know that, production supersedes kind of, the consumer seeing it. But at the same time, like, we've been here now for, over a year where it's like, people are
Well, and
paying obscene prices.
I think people forget about the like impact of base effects on inflation when you're comparing, you know, numbers now to really high numbers a year ago. Yeah, the inflation picture looks better on that year on year basis, but that doesn't mean that prices, like you mentioned, are falling. It just might mean
Right.
prices are staying the same.
Right. Stabilizing. But again, like, you know, you got mortgage rates through the roof. You got, as it is, people are living, paycheck to paycheck or living off their credit cards, and auto loans went through the roof. Now you have defaults on auto loans starting to happen. I don't know. I just think we're in a I think there's a shoe to drop and it just hasn't happened yet.
Hmm.
Maybe I'm wrong.
The housing market has been uh, weirdly resilient through all of this, right? We're at rates, many people are getting rate quotes in the eights if you don't have perfect credit. And they're still buying houses at 8%. I mean, the affordability of a house has doubled since COVID or more. And people are still buying these houses. How much does the Fed want to see a slowdown there and they're not getting it? Is that like do you think that's a sticky part of the economy that just hasn't done what the Fed thought might happen with mortgage rates at 8%?
I think what could happen with the housing market is the reason why prices are still up where they are. Um,
Well, it's because supply is low still.
right.
Right.
And nobody wants to move, right?
No.
Like, if you're locked in
Nobody
at
wants to take
3%,
their 2.5%, 3%
right.
mortgage
If you're
and
locked in at
sell
two
and
and a half
buy an
to three
8.
percent and then sell and buy at 8.
Yeah.
So cash buyers are still okay. They're in charge now for now because, obviously that makes, more sense. But um, what I think could happen is when rates start to come down, and now you have a ton of supply hit the market. Well, the supply is going to hit the market at whatever this kind of high valuation that we're at.
Mm-hmm.
It's going to overflood the market with supply, and I think we could see a little bit of a housing correction. Um, I thought we would have seen that already because maybe people that
Mm-hmm.
do need to get out of their house, like are that much more inclined to do so. But I think when rates do actually finally start to come down, um, that could lead to an oversupply of on the market that would then in turn basically lead to some sort of correction in housing prices. Now you have all these people that thought that their house was worth one thing and it's worth way less, and
Mm-hmm.
now they're not necessarily um, spending as much on other things because they don't have that kind of safety in their back pocket that, like, oh well, at least I'm living in a $2.5 million house that used to be $1.5 million. Well, no, now it's just back to $1 million. It's right back where it was. So you didn't really gain anything in your house, and I think that also could lead to some kind of spending, constriction or whatever. So I just, I don't know. Maybe I'm just too early on thinking that this market is overcooked, but or maybe I just overstayed my welcome on the short. I don't know. I just think that ultimately, like, we'll see what happens Friday, um, and we'll see what happens kind of into the end of the year here. But I'm pretty shocked that we're where we are still
Mm-hmm.
today.
How different would you say the economy is during this hiking cycle versus the last hiking cycle the Fed went through? I think it was 20, what was it, 2018? Yeah. Yeah.
Um, well, I mean, obviously the economy had a lot much more liquidity. Like there was much more, you know, COVID, they injected a ton of money into the economy. Everybody got stimulus checks.
Mm-hmm.
People were home working. A lot of people got second jobs that they were getting paid for because their primary employment, was paying them to be at home, but they're not
Mm-hmm.
really working a full-time job at home. They're doing, they managed, or they started an online business, or they were selling, selling things online, or whatever it is. Like, people got
Yeah.
creative with ways to make money. And so I think, you know, definitely the economy is healthier this time around than it was the last time.
Mm-hmm.
But at the same time, it's like, you know, I don't know. Is it healthy enough to kind of shake this all off? Maybe. I don't know. I don't
All
know.
right, let's go to some audience questions. Our first comes from Rico. He asked, "Would you invest in any EV stocks next quarter, and if so, which would be your top picks?"
I don't know. I don't really invest. First of all, I'm a trader. I'm not an investor. I leave the
Mm-hmm.
investing to, whoever does my 401k or whatever it is. But I mean, look, if you want me to put my finger on one, like, 5 years ago, 5 6 years ago, I used to see Teslas, like, you know once in a blue moon, and I'd be like, oh, that's cool, there's a Tesla, right? And then
Oh, they're
maybe
everywhere
whatever,
now.
maybe 8 years ago, whatever. And then, like, a couple months go down the line, and it's like, okay, now you're like, wow, it's like you see one, you'd see one on every block. Now you
Mm-hmm.
go and you see, like, every other car is a Tesla, right?
Mm-hmm.
Rivian, you didn't see any of them. Now,
Mm-hmm.
all of a sudden, in the last 2 months,
Yeah, I'm
I've
seeing
gone
them.
from seeing none to, like, I probably see one a day. And
Mm-hmm.
then now, like, in my neighborhood on the weekends, I'll see like 3 or 4 driving around, different ones, not the same ones. And it's like every day you're starting to see more and more um, Rivians starting to appear. And it's a nice looking car. I'm not crazy about the
Mm-hmm.
pickup, but the actual SUV is, like, actually pretty cool. So
Mm-hmm.
if, for me, I mean, if Rivian can kind of keep their spending and hit their production numbers, and I think the demand is there, and for me, Rivian is one that I would probably look at. Um, the others I just don't know well enough. Like again, I don't. I see Rivians on the road, and that for me is usually like analysts do channel checks. I do my own channel checks. Right, you walk into a
Mm-hmm.
store, the line's out the door or it's empty. Like that for me is a
Right.
good kind of consistent gauge of like, okay, well, how's the store doing overall? Taking out all the other stuff, their spending and their things like that, but like just overall demand, like overall kind of popularity and things like that has always been something that I've used in my kind of trading and if you want to call it investing for kind of longer term things. And so for me, Rivian is probably one that I like. But I thought the same. I feel the same way about, and this isn't an EV thing, but Roblox. Like my kids are on Roblox. Like they'd be on it 24
Mm-hmm.
hours a day if I let them. And obviously, they've hit a certain wall where they're at an interesting point where it's like, okay, how do we actually monetize these kids and these users? But like for me, that's another one that I'm just like, God, like, if these guys can just like figure it out, I mean, I mean, they have an audience like nothing I've ever seen. I mean, they get them,
Mm-hmm.
you know, outside of Apple because Apple, supplies the tablets and stuff for these kids to play Roblox on. I mean, they probably have the largest grasp on kids under 10 of any public company out there.
Yeah.
And if they could figure out a way to monetize that, like that to me is a huge, could be a huge thing. So like those are two stocks that I kind of use my own channel checks, and I'm like, I think these could be good 5-10 years from now if they really want to get their act together and get things moving in the right direction.
Hmm. Rico also wants to know if you see crypto as an asset worth investing in.
Definitely
Or
not.
maybe.
And
Okay.
I'm sorry to any crypto traders out there. I just think it's there's a use case for blockchain. I definitely won't discount that. Almost every
Mm-hmm.
company out there uses blockchain. That being said, now the whole kind of hype is AI, and so how much does AI replace blockchain or integrate with blockchain? So I definitely see that. But as far as an actual asset class, like no, I mean, to me, I mean, to me, crypto is like trading cards. Like it's
Hmm.
worth what people are willing to pay for it, and
Right.
there's cycles where it goes through the roof and people are willing to pay 10x 15x 20x, and that's fine. And then when there's downturns in cycles where everybody that just paid 15x is now underwater. And so um, that's kind of my feel on crypto. I also think that it's a very manipulated market.
Mm-hmm.
Some of the largest, you know most crypto is owned by not that many people. Like, I think,
Yeah.
at least, when I used to really focus on trading it, and I don't anymore, but back in like 2018, 2017, when I was trading it, um, it was like, there was like, 40 accounts that owned like, 90% of crypto. And, it's just maybe, it's no different than like a high shorted stock, like, or that has a low float. Like if the float is constricted to to a select number of
Mm-hmm.
people, they're really going to determine, where that goes. And so crypto to me, um, investment, no. Trading, sure. I mean, if something moves, it's worth trading. Like, there's money to be made if things move. I mean, I don't care if I'm looking at a stock of onions, or if I'm looking at a stock of a chart of onions, or if I'm looking at a chart of milk, or if I'm looking at a chart of Bitcoin, or to me a chart is a chart. And so yeah, I mean, if it moves, it's certainly worth trading until it's not. But for me, I'm not a believer um, in long term. I bought crypto in 2000 and I don't know 2012 ish or something. I bought Bitcoin at like 5,000, and I ended up selling some at like 18,000, and then I never got back in when it dipped to 6 and went to like 40 during that crazy run up. Um, but it's going to have a big move one way or the other. Bitcoin's been in a very large in a very large in a very small range or tight range now for a pretty long
Mm-hmm.
time. And the longer something stays in a tight range, the bigger the move is when it breaks one way or the other. So
Right.
yeah, I mean, if crypto ever gets, if Bitcoin or crypto ever gets going above 35,000 and really gets some momo, sure, it can go to 50, no problem. 50, 60. If it ever really breaks down below 20, could it go back to 10? Sure. But again, that for me is just trading, seeing how the kind of market participants treat it, and kind of seeing where it goes from there.
Hmm. Nick asked, what do you think about the possibility that the Fed just hates this rally? So for Jackson Hole, maybe Powell has more license to really be hawkish like he was last time, as opposed to a regular Fed meeting.
Yeah, I mean, that is 100% my thought. Like
Mm-hmm.
he cannot, but again, today's move in rates kind of took that little like extra power that I felt like we had for that argument out of the equation. If we if rates went higher again today than they were yesterday, and like we're up at like 4.5% on the 10-year or wherever, whatever we got
Mm-hmm.
to, yeah, I think he definitely could look at this and be like, what, this is crazy. Like the market's getting out of control, things are getting out of control, and like we're not crazy about this. But I think the fact that rates kind of came down, but maybe he then looks at that and says, you know, you guys still are crazy. Like we still have more to go. I don't know. Honestly, I don't think the Fed knows what they're doing. And
Mm-mm.
I think they would probably be the first to admit it. Like they're trying their best to navigate something that we haven't really seen, or at least that this makeup of the Fed hasn't seen before. So like, if we get out of this without a recession, with inflation back to their core number of 2.5%, whatever it is, and the market at all-time highs, I mean, Powell will go down in history in business textbooks as a legend. I mean, the guy
Yeah.
literally like took us out of what could have been a disaster. And he'll go right up next to Bernanke, who saved us in the banking crash. Like, he'll come out looking just as good. Um,
Mm.
but I think they too are, they're trying their best. They're going to kind of, navigate the waters as things come. Um, Nick, I hope he says that Friday, because again, like if we get through Friday and the market doesn't really sell off and we're continuing to punch up after Friday, I mean, I don't know what would really sell us off at this point,
Mm.
barring some crazy, credit crisis or, some crazy, maybe military thing, to do with Russia or something like that. But even
Mm.
that like has kind of turned into, I mean, no, I'm not discounting at all what's going on there. Don't get me wrong on that. But like even that you would have thought would
Yeah.
have kind of put pressure on the markets overall, or North Korea, or Japan and what's going on there. And like there's just so many things that like I feel like have the possibility to be a market moving event, and the market is just so resilient and kind of just keeps shrugging it all off.
Mm.
I
The
mean,
Fed. Mhm.
Moody's downgraded our entire,
Yeah.
second banking sector 2 weeks ago, and the market sold off from it, but we bounced right back. I mean, we just retraced 50% of what we sold off.
Mm-hmm.
So,
Well, and we're
um,
rallying this week, and there were downgrades Monday night
right,
from
right.
S&P.
And so, and literally we bounced right off of when that happened. So,
Mm-hmm.
um, I don't know.
Hmm. Uh, Odai or O'Day, apologies if I didn't pronounce that right, asked, with over $5 trillion in money on the sidelines, do you think this is a temporary pump in tech? If so, what economic indicator slash report might challenge that next?
Um,
I feel
huh.
like there's a lot of focus on the jobs report next week because
Yeah, the jobs
the
report's going
Fed
to
has
be an
said they're really waiting for that cool down in labor, and they haven't gotten it.
yeah, the jobs report's going to be important. I think I think Friday is really important. It's really going to
Mm-hmm.
look, he was very clear last year when Jackson Hole came out. He came out, it was short to the point, and he basically said, I mean, he basically all but said this market will go lower because we're going to add a lot of pain and whatever.
Mm-hmm.
If he comes out Friday and kind of sticks to that tone, like, look, we're not letting off the gas. We're sticking to the plan. You know, there is no kind of, you know, cuts are not in the immediate future, and you know this market's gotten ahead of itself, and I don't know why you guys don't believe what we're saying, but like, this is reality, like this is what we're doing. Then we could get some sort of pivot, as far as that's concerned. But um, I think Friday will be important, and then I think, I don't know. I really think that the jobs report is really the last two things that will kind of dictate where we go for the rest of the year. I really, really firmly believed last week and even beginning of this week that our highs were in for the year. Um, Nvidia maybe has me thinking otherwise, because if money's going into Nvidia like this and they're at the forefront of everything that's going on here, then money is certainly going to start dumping into some of these other tech companies, and that's going to help their earnings and their revenues. um, we'll see, we'll see.
Hmm. For the market as a whole, what would you say are the key levels that you're monitoring? I know you're short the Qs, but what about, SPY and the Qs? Where are you kind of monitoring for changes in the market?
Yeah, I mean, I was just having this conversation with somebody else earlier when I was trying to figure out just where I wanted to decide I was wrong, on the Qs. I think 375 is a very important level. If we close above 375, um, which honestly probably will happen tomorrow, um, if we're above 375, and certainly like the next key spots are 375, 380, and then the all-time high, or whatever that high is from the 387, 388.
Mm-hmm.
But if we now, if we get through Friday and we're still above 375, and then we go into next week and we're above 380, like, I mean, honestly, this we could make a punch. We might make a punch and try for all time highs here. Um, Spy, or not all time highs, but the highs from the other day. Oh, which actually is all time highs. Spy, key levels to me are 450, like three, 452, 453, and then 460. I mean, again, like, if you asked me this yesterday, key levels were, we blew through those key levels today. Like, to me, a
Mm-hmm.
key level for the Qs was 371, and we're clearly above 371 and hanging in there. Um,
Hmm.
and now it becomes 375, and yeah, those to me are the key levels. But I I really was inclined to think like 2 or 3 day bounce shortable yesterday. I really thought that was the case. Today really threw me for a loop.
Do you think
I'm not sure yet.
do you think Nvidia's earnings coming like, 2 days, well, really a day before Jackson Hole begins? Jackson Hole technically starts tomorrow, but the kickoff is Friday with the Fed chair. Do you think that kind of threw a wrench in what might have been more normal market action leading up to this symposium?
Um, I think it will make the fall a lot harder if he says something that makes the market fall,
Hmm.
because now you're going to have everybody, probably tomorrow, I'm probably tomorrow buying, a lot of, there's going to be a lot of things that are up tomorrow based on Nvidia's report today. Um, some of these more, snow. I mean, snow reported today, but still like Unity. I mean, there's going to be a
Mm-hmm.
lot of these smaller-ish tech
Well, all the
companies that are,
SMH stocks too, like.
yeah, like a lot of this stuff is going to be up on Nvidia's report. And so if Nvidia didn't report today and everything was right where it was, then I think, the upside potential for a reaction to Powell would have been much larger than it is
Mm-hmm.
now. Because I think, if he says something great, I don't think we're necessarily like if we were where we were on Monday and he said something phenomenal for the markets, right? Let's just say you assume that, okay, that phenomenal, statement, puts, adds 5 to something. Now, where we are coming into that, if he says something phenomenal, maybe that what would have added 5 adds 2. Um,
Mm-hmm.
but then if you look at the reverse side of it, if we were where we were on Monday and he has said something, terrible, and there's, potential for, 5 downside. Well, now if, we've just kind of grown that much more from Monday. So if he says something terrible, you could have potential for, 10 downside. So, and those are
Mm-hmm.
just totally arbitrary numbers. I'm just using a, kind of a 1 to 10 type scale. But, uh, there's going to be a lot of people. There's going to be a lot of things up tomorrow, and a lot of people that have been buying Tuesday or Monday, Tuesday, Wednesday, today, continuing probably to buy tomorrow. So there's a lot of people that are buying here or buying this week. Um, this rally was a combination of short covering, I'm sure, but also, some real buying. And if he says something that spooks the market, then, and we get kind of below some of those levels, I mean, anybody that bought this week is really gonna, feel inclined to sell, feel inclined to sell. And leads to that's what really leads to major moves in the market one way or the other, is when everybody's kind of leaning to one side, everybody's thinking the same thing, and then all of a sudden they're caught off guard and everybody panics together and has to kind of do the opposite thing. um, I'm
How
unfortunately
would
not one of those people who's with the masses right now.
mm-hmm. How would you try to describe the current market sentiment and action?
I think the market sentiment is, there's guys like me that think that the market is way overhyped, and this is crazy and we are where we are. And then I think there's, people that truly believe that, things like Nvidia and things like this next, computing, that the whole computing world is changing, and that there's room for growth and this and that. But then there's people that think that's a bubble. So if I had to like kind of think about it, I would say there's probably, it's probably a coin flip. I mean, there's probably equal amount of people that think, everything's fine, as there are that think that everything's not fine. And um, I think that's what probably has us kind of having these extreme moves, is that when we get, down to a certain level, everybody's like, okay, well, now let me shift to buy some stuff. And then we have an extreme move up and everybody's like, okay, let me sell some stuff. And then you have your guys that come in and short. But um, when all is said and done, uh, I would say sentiment, I mean, here, I don't know. Coming into Friday, like I don't know how this continues to the upside. It's very rare that I'm like totally wrong, and I'm not saying that to, to be conceited or anything like that. But I've been doing this a long time. It really is very rare that I'm totally, completely like wrong. Um, I'm early sometimes, but it's rare that I'm completely wrong. And honestly, this move today, and then this video report, and um, just the action overall has me really thinking that maybe I am wrong this time. And it is what it is. It is what it is.
What stocks are you bullish on right now and why?
I'm not really bullish on anything, to be honest with you.
Okay.
I
Then
I
what are
really believe
you?
that the market should come down.
Yeah.
So
All right.
I mean, I don't know, if you think the market's going up, Amazon looks great, Google looks great. Um,
Just by the
just basically,
technicals.
Netflix looked great today. Netflix out of nowhere. Nvidia now looks great. Um, you know, Basically every mega cap tech stock looks great, and I'm the idiot who's sitting here short tech. So I probably should be listening to myself. But I mean, if you're bullish on the market, tech looks great. Um, Obviously the things that are going to have the biggest issue in this rate environment are going to be some of the smaller caps that need, that have big debt and they have to kind of fulfill those debt requirements and things like that. And so I think, you know, SPY and Qs, if the market really is like, if we really are, all clear, like, can those test the highs and possibly even break through them? Sure. But I don't think IWM will come anywhere near close to the highs, no matter what SPY and Q does
Mm.
by the end of this year. I think, maybe IWM gets to 194, but, that even that would be, I mean, that's insane to me. That would really be insane.
Give me some stocks you're bearish on and why, besides just all
Um,
of tech.
No, tech. I mean, any chart that's had a crazy run up in the last, 5 days. I mean, Meta yesterday to me looked like a great short. Today, it took out yesterday's high with no issue, and tomorrow probably goes to 306. Um, Nvidia, like, yeah. I mean, I would, outside of this report, like, if Nvidia was here, like, I'd be the first one to start shorting it. I think I'm gonna try not to, like, I have enough skin in the game in my Q short that I
Mm-hmm.
don't really feel the need to pick individual stocks at
Mm.
this time.
Okay.
But I mean, like, I don't know, like some of these crazy, like, I don't know,
All right.
AI. I mean, they burn money like, I read some crazy report that it costs them like $700 million a day to run this stupid thing, and
Hmm.
and yet, you know, but Amazon did that for 15 years. They lost
Mm-hmm.
money every day. They lost money every quarter. They lost more and more and more money. And Bezos was a good enough salesman to convince investors, like, just stick with it, stick with it. When we hit the tipping point, you'll never look back. And I mean, look what that company became. So
Yeah.
um, I think anything that has solid management, that you believe that they really know what they're doing, that doesn't have a tremendous amount of debt that's in jeopardy of defaulting on if rates continue to go a little bit higher, or even flatline here. I think you can kind of be bullish on. I don't know that I would buy them here, like I would, but again, like, now I'm thinking about Nvidia, and it's like, everybody was waiting for a pullback. So, like, if the numbers were terrible and the stock traded for, what did we close at? It closed at like 470. So if the numbers were terrible and it was down and it went to 420, which is literally where we were 3 days ago, which is mind blowing to me, but or like even 400, everybody would have bought it at 400 anyway. So, like, now that I'm thinking about it, like, it was, you were okay to own some into it, buy more if it goes to 400, and you were okay to own some of it, and hit a home run if it crushed like it did. But again, I think it's really going to just come down to how sustainable this kind of trajectory is, and how much people, excuse me, truly believe that you know AI is, or quantum, the next generation of computing, including quantum computing, and some of these companies like IONQ and stuff like that. Like, how quick does it get adapted by the masses? Um, but it doesn't have to be by a common everyday person. Like, it's really just how quick does it get adapted by corporations and things like that. Like, how quickly does Microsoft really put AI to use, and make it
Mm-hmm.
something that can, because once big massive companies start using this stuff in everyday occurrences. Like I'm sure they already are, but like once it really becomes mainstream there, then it naturally just trickles over to the everyday person. So
Mm-hmm.
I really just think it's a matter of like how quickly can this kind of idea like trickle over to, or become adaptable, and then at the same time how sustainable is this kind of growth. I mean, look, if Nvidia came out with today's report in the interest rate environment that we were at, you know, a year and a half ago, or 2 years, when we were at, 3.5%, like before the Fed really started. I mean, you're talking about a $650 stock instantaneous. Like, the thing would be up
Mm-hmm.
$150 right now. But
Mm-hmm.
again, it's had a crazy run.
Yeah.
It was $140 a year ago, and
Mm.
so less than a year ago, and so 140 to 520. Yeah, AI is real, but like, is it priced in now? Or and their
Mm.
guidance is saying no, but like at the same time, like, okay, well then what about the quarter after that, and the quarter after that, and the quarter
I think
after
this
that?
was
Like,
the 18th quarter in a row that they've beat.
right, right,
Mm-hmm.
that they beat, but I'm talking more about the guidance trajectory.
Yeah,
I
the
mean,
guidance is, yeah.
if you continue on this path, like, you're basically telling me like, all right, well, 2 quarters from now they're going to be guiding 100 billion. Like, I think that's a little like obscene. Like, that's not,
Yeah.
it just, I don't know how sustainable it is. I'm not saying that it's going back to 300 by any means or anything like that, but like at a certain point, money will move out of there, and or it should go sideways for a bit. Um, but who knows when that happens? Maybe it happens at 600. Maybe it happens at 700. I don't know.
Hmm. If
Again,
someone felt like they've kind of missed the Nvidia jump, I mean, it's obviously the stock is still going up, but if somebody else wanted to get in on a stock that was cheaper than $520, what other chip makers do you see kind of being big in the AI space that might be worth trading?
I mean, you could see SMCI moved a lot just based on Nvidia's report. That there was some pin action there. IONQ is not really a chip maker; it's more of like a quantum computing thing. But that thing is big off of this. But if you really just wanted to play, something that's cheap enough and captures the whole sector, I mean, SOXL is really the way to play it. Um,
Mm-hmm.
just the three times ETF.
Mm-hmm.
There is, I mean, Nvidia could come out right now and say, we blundered on guidance. What we just said, it's actually going to be double that. You, I would never, ever, 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 ever buy Nvidia at 512 after a report when it was just 400 last week. I just can't. That's just not what I do. If it goes from 512 to 600, so be it. I won't be pissed that I missed it. Honestly, I just need to not get caught shorting this thing. But I'm okay missing the next $100 or $150 in Nvidia, because that's just not what I do. I can't buy something up here. So if you feel like you missed out on it, maybe wait for a pullback to 480, 490. And you can play it that way, or wait for a pullback to 475. Nothing goes in a straight line forever. It's
Mm-hmm.
impossible. At a certain point, there's no buyers left. I forget who it was, Einhorn or Ackman or one of these guys. Um, many years ago, walked into one of these investor conferences and said, and this was back when Apple was, whatever it was, it had gone up tremendously, and it was, close to all-time highs for that time. And he walked in and he said, by a show of hands, how many people in here own Apple? And every single person raised their hand. And he said, that's exactly why I'm shorted, because at a
Mm.
certain point you run out of, like, you
Buyers.
run out of people to buy. Like, yeah, you can get waves of, more influx and more buying, but things cannot go in a straight line forever. There's always going to be some kind of correction back, mean back to reversion or whatever, one of some form. But whether or not that happens from 520 back to 480, or it happens from 600 back to 520, that I couldn't tell you. The only thing I could tell you is that I personally can't buy Nvidia here.
All right.
I wish I could. I mean, I wish I could. I just can't do it.
Yeah, and that's your own, trading style, strategy. Yeah, that's what you do. All right, we're at an hour, and this has been a really great discussion. So for everyone who's still with us live, I'm putting a link in the chat, maybe, for our next event next week. Patrick Haw will be back with us next week. He's been on several times, always has great insight, really great researcher about the market. So he'll have lots to talk about. Thank you, Josh, for coming on today. And I hope you have a great rest of your trading week. I hope the short works out for you on Friday.
We'll see.
And
This
enjoy
one
your
might be a
vacation.
loss.
Enjoy your
All right.
vacation next week.
Thanks so much.
All
Appreciate
right.
it.
Have a good night. Bye.
See ya.